So we all know inflation is out there and it's leading to some negative things, especially the use of credit cards. The Federal Reserve Bank of New York says credit card balances nationwide, prepare yourself, $1 trillion higher than pre-pandemic levels.
So Andrew Sampson with Wilde Wealth Management is here this morning to take a look at 3 specific ways to pay down some of those debts, their pros and their cons. Andrew, good morning.
Good morning.
Yeah, thank you for coming in.
Thank you for having me on.
Yes, so let's tackle the first way, getting a personal loan.
Okay, yeah, so getting a personal loan, this could be a bank loan or even like a home equity line of credit, can be a really good, useful tool to be able to consolidate. Maybe if you have multiple credit cards, you can consolidate them into one. Keep in mind that the term for that, for paying off that loan may be shorter than paying off the minimum payment on a credit card in perpetuity. So that the amount that you pay could go up, your required outcome or output could go up. But the good news is you have a set month in the future where you can see the light at the end of the tunnel and all of this will be over.
That's it, right?
Because the big issue is the interest rate, right? I mean, if you get a personal loan, even though interest rates are up, it's going to be nowhere near what you're paying on a revolving credit card. And that's what kills you. Like you're talking about paying the minimum payment. You literally can pay a minimum payment for decades, right?
Exactly. So the reason I mention a home equity loan is because it's a collateralized loan, which means the interest rate should be substantially lower than that uncollateralized credit card. But do know that there is some risk with that because now you're putting your home at risk, whereas before it was a credit card and it was not linked to your home.
Okay. Let's tackle the next one, opening a new credit card with 0% interest.
Yep. So pros with that, obviously it's a 0% interest versus what's probably likely close to a 19% interest rate on most of these cards. And with interest rates going up, those interest rates that you may have paid last year have also gone up. So it's become more expensive just to service the debt that you have. If you open that 0% interest rate card and you do a transfer balance, keep in mind that likely there's going to be a fee for that as well.
It's a percentage of the balance you have, so it ends up not being a great deal, right?
Exactly. So normally that's about 3%. Now, if you paid that card off over the course of a year, you've paid 3% versus 19%. So it may be okay. But keep in mind, you've just expanded your credit limit, and the credit bureaus look at 2 things really closely: your available credit and your credit usage percentage, right?
Of that credit.
Correct.
Okay.
Correct. So if you were to open a new card at 0%, do a credit balance transfer, and then you close the old card, you may reduce your limit.
Oh, interesting.
So accidentally, you may reduce your limit, and that can negatively impact your credit. So if you are unable to execute and pay off that debt, you may find yourself a year from now trying to get a new 0% interest rate credit card with even worse terms, or may not be able to refinance that debt at all.
Well, and that 0% interest only lasts for so long, right? It's like for a year.
Normally it's 12 or 18 months.
Or you can go totally scorched earth too, right? And eat beans and rice and cut all your expenses down and try to kill these things head on.
Beans and rice are good.
Yeah,
they're delicious things.
I consider myself a fairly good cook. I can do some things with
beans and rice.
Yeah.
Okay.
With that said, if we can, and here's the problem with inflation, some of that wiggle room to be able to cut back has been eaten up with inflation, right? So those beans and rice are actually getting more expensive.
Yeah.
You can also, if you're in some real trouble, credit card companies are willing to work with you, right? If you give them a call.
Absolutely.
Talk to them. So what do you say? All right, I'm behind on my payments. I've got $15,000 in debt. I'm underwater, Visa. What can you do for me? What do you ask for?
Yeah, absolutely. So the person on the other end of the phone, they're just working their job. So the one thing I would say is it's purely business, right? Don't get emotionally involved. What you want to do is you want to be able to save up a lump sum. That may mean putting off making some monthly payments for a little while to save up a lump sum and call Visa and say, look, I've got $3,000. I will give you this $3,000. I owe $5,000, but I want you to settle this debt for $3,000.
Oh.
They have the option to say yes or no, right? If they say no, you're no better off or no worse off than you were 5 minutes ago before you made the call. This can be extremely stressful, and this is why people tend to hire these debt consolidation companies. But oftentimes, they're not doing much of anything that you couldn't do for yourself.
Yeah.
So before you go that route, I would highly encourage people to reach out, call the credit card companies, try to negotiate for yourself, and employ the other two strategies we talked about before even considering hiring a debt consolidation company.
So as you're dealing with that, let's talk about a credit report also, if we can. Is it wise maybe to call some of those credit cards or something if they have late payments and things like that on your credit report and say, hey, I want to dispute this? Or can you do things like that also to kind of better your credit and prepare yourself financially a little bit better?
You absolutely can, but you start to get into some areas of some moral dilemma. Do you actually owe the credit?
Yeah,
Do you
true.
actually owe the debt or not? And if you're going to call and dispute it and say, hey, I don't owe it.
Or a late payment, you know what I'm talking about, like to make your, to better your credit score.
Yeah, absolutely. So if you were to call the credit bureau and dispute the charge, normally they like to have you put it in writing. Then the creditor, right, whoever you owe the money to, they have a certain period of time, I think it's 30 days to reply. If they don't, then that does come off your credit report.
Interesting.
Andrew, thank you for coming in. I appreciate it.
I appreciate
Good tips.
you.
And you're
Thank
at
you, Andrew.
Wilde Wealth Management. Want to give
Yes, sir.
Yeah.